everyone, this is Dr. T. Varalakshmi discussing you about the profit and loss account as a part of business economics and financial analysis. Preparation of the final accounts of the business transactions. Once a trading account is prepared, the next step is to prepare the profit and losses accounts, that is recording of all the indirect expenses that has done with producing of the product, that is advertisement expenditures as done, but it is indirectly for all the products they are giving and carriage outwards of the organization and investments, all the other indirect aspects involved, indirect expenses as well as indirect incomes gained by the organization is going to be recording for a particular financial year, that is called as the profit and loss account. It is prepared to show the additional cost which is involved in the production processes as well as the a cost which is added to the gross profit or the gross losses, that is going to be preparing under the P&L account. If we see this proforma of this profit and loss account, anyhow in the trading account, if any gross loss finds, then it will be mentioned under the debit side because of the loss, that's an expenditure. And if any gross profit occurs, that thing has to mention under the credit side of this one. And income this profit and loss account will also treats as an income statement, and the title we should not forget, that is income statement or the profit and loss account of so and so companies, that company's name for the year ended, that is 31st March 2021. Like this, they have to mention the time period too under part of this title of this profit and loss account. Then later, the indirect expenses of the business like the salaries, rent, rates, taxations which they have paid, traveling expenses, stationery, printing, posting, audit, any legal charges, telephone charges, insurance premium, marketing and advertisement charges, interest paid, commission paid, any expenses which they have paid, repairs and renewals, other expenses, loss of file, theft, etc. has to mention under this debit side of the that is indirect expenses related to the manufacturing of a product, that they have to mention under the debit side. Whereas on the credit side, if the gross profit is there, that, and for that one, if any rent received, interest received, bad debts recovered, that is any for example to the creditors, if they have bills receivables of the organization is 10,000 rupees. Out of this one, 8,000 paid, 2,000 not paid. Then that will be called as the bad debts. Unrecovered amount by the organization will be called as the bad debts. If that bad debts occurs, then they will mention under the debit side. If that bad debts recovered, then they will mention under the credit side. Interest paid, expenditure, that's why debit side. Interest received, income, that's why on credit side. Commission paid, debit side. Commission received, credit side. Dividend received by the organization for their investments, then it is under the credit side. If the dividend paid by the organization, then it will be on the debit side. So like this, all the indirect expenses and the indirect losses occurred in the business transactions are all recording under this profit and loss account. Here the remaining balances will be on the debit side. If it is more and credit side it is less, then it will be treated as the net loss. Net loss. Because expenditure is more, income is less means loss. If the credit side is more than the debit, then to balance, that balancing figure will be treated as the net profit, where it will be posted to the balance sheet of the organization. Well, this is the example for the profit and loss account. Whereas a particular title is we have to observe the profit and loss account for the year ended 1st March 2019 or the 2021. For every financial year, they have to prepare this income statement or the profit and loss account with the debit and credit balances. And the opening stock, this first part is about the trading account, and the second part, any indirect expenses like printing, stationery, electricity, selling, distribution, miscellaneous expenditures are treated as the indirect expenditures, and the gross profit which have gained, it is posted under this credit side, which is added by the interest income of the organization, and the balances of that will be treated as the net profit. So that is the some of the example of this profit and loss account. If we see these features of this profit and loss account, it is made on the last day of the accounting year, and the two stages of the final accounts is the that is second stage of the final accounts is the profit and loss account, and here only the indirect expenses and the profits are all showing in the profit and loss account. It is a flow statement of cash flows and cash inflows, and it's a periodic movement, and it establishes periodic movement means one time to another time, and it establishes the matching cost principle, which means for the expenditures what is the revenue which is gaining for the by the organization can easily depicts, and it gives the knowledge of the net profits and net losses gained by the organization, and it makes easy for the comparison of profits with one another organization, and it gives the control over the expenditures and helps for the future planning, and income tax payable knowledge can also be known from this profit and loss account. The objectives of this profit and loss account is to know the trading results and to know the related profits out of their trading activities and the relationship between the profits and turnovers of the organization, because the total capital, that is the share capital, reserves, etc., anything which they have borrowed is concerned with their day-to-day activities. So with that activities, how much profitability they have gained is very important. That one that is going to be identifying with the help of this profit and loss account. The need of this profit and loss account is to know the net profits and net losses, to compare with this any other organizations which is gaining the profits, and the gross profit comparison with the net profits are also, so that they can best control over their expenditures, and the future plannings can be made easy, and the taxation plannings and the preparation of the balance sheet, everything will made easy with the help of this profit and loss account. The advantages of this profit and loss account is it measures the successfulness of the business when compared to the previous year, and it helps in obtaining loans of the banks from these banks based on their profitability income levels. Only the banks will provide the loans to them, and it enables the owners and managers to plan ahead. So based on their income, how to expand the business can easily made with the help of this profit and loss account, and it shows all the expenses and highlights where they have increased or where they have lagged, can easily find out with the help of this profit and loss account. There are certain disadvantages too, that is only it shows the past performance, but it won't give the any analysis for the future returns, and window dressing is there, that is play with this numbers, the organization can, there is a chance of showing some manipulations, and because of lack of standards in this comparison of the profit and loss account, it is difficult to arrange get the analysis of the comparison from one year to another year, or one company to another company. So if we see this differences between this trading account and the profit and loss account, the first stage in the final accounts is a trading account. After trading account only the profit and loss account will be prepared, and the gross result, that is gross profit and gross loss of the business, can be known from the trading account, whereas the net profit and net loss informations can be known by this profit and loss account. Here, that under the trading account, all the direct expenses are all going to be recording, and the direct incomes is also recording under this trading account, whereas the indirect expenses and indirect incomes are all recording under the profit and loss account. Here, it does not start for the balance sheet. Trading account is an incomplete one for this trading account, whereas the profit and loss account is a completion version for the preparation of this balance sheet. So its balances is transferred to the profit. Trading account balances will be transferred to the profit and loss account, whereas this net profit and net losses will be adds or subtracts from the capital of the business organizations under the balance sheet. That is the differences between the trading account and profit and loss account, and the proforma and objectivity, need, advantages, disadvantages, and activities involved in this profit and loss account. Thank you.
Like, share and subscribe. Hit the bell icon for more updates.